I'll make a bold prediction today that some of you may not like, but need to hear. This goes for entire lending organizations, LOs, and realtors. What's up, guys? I'm currently doing a lot of research for a talk I'm giving in Seattle in November. We'll be speaking November 19th at the Overlake Country Club. This is a small venue, so if you're in town, you want to get your tickets now before it sells out. The link for that is in the comment section below. The research I'm doing now for that talk is kind of a look forward and what lies ahead for both realtors and lenders, but the twist in the talk is how fear plays a role in this. I don't want to give away too much today. I hope to see you there. But today, I was researching and reviewing 2019, the original forecast compared to how we're doing today, and I'm also researching what we believe 2020 will look like moving forward. So I started with the look back and pulled predictions and forecasts from both NAR and the Mortgage Bankers Association. Some of this is surprising, some's concerning, and some is actually positive and uplifting. Let me nerd out for a second and distill this all for you. So back in December of 2018, the MBA, who is really good at this by the way, forecast total mortgage originations to be $1.6 trillion. They also forecast mortgage rates to be around 5%. Realtors, the MBA predicted $1.2 trillion in mortgage purchase volume. Obviously volume that involves you guys. Well, let's fast forward to today and see how we did.
Missed it by that much.
Well, wouldn't you know it, 2019 had different plans and blew all those predictions away. Total mortgage originations will probably finish around 1.9 trillion. LOs and lenders having record and banner years. You can thank the extra $254 billion gift that was the underpredicted volume for that. And we all know why that prediction was so far off, right? Yep, interest rates dropped much lower than almost everybody anticipated. Again, the MBA predicted 5% rates back in December of 2018, and they ended up around 4% and probably will finish around the high threes by the end of the year. Although purchase volume that involves realtors was basically right on. We should finish as predicted in the $1.2 trillion range. So awesome. Lenders were all handed a $254 billion gift to share, and all lenders had banner years. As my coach Bill Hart would say, so what? You were supposed to do that. What's next? Paraphrasing, of course, coach. Good point, coach. What is next for lenders and realtors? Well, I'll make a bold prediction today that some of you may not like, but need to hear. This goes for entire lending organizations, LOs, and realtors. Think of your 2019 volume in terms of transactions and total volume. Got it? You should be envisioning your total number of transactions and volume for 2019. Now, my bold prediction is this. It will take twice as much effort to close what you did in 2019 in 2020. If you close 16 billion as a company in 2019, it will be twice as hard to do that exact same number in 2020. Realtors and LOs, if you closed 100 transactions yourself in 2019, it will be twice as hard to do that in 2020. Now, why would you say that, Ryan? I'll dig into that in greater detail in my talk in November, but here's the short answer. There's good and there's bad news. I'll start with the good. The MBA is forecasting another good year in real estate and lending. Real estate transactions that need mortgages should be relatively similar to 2019 numbers, another $1.2 trillion worth of transactions. NAR's outlook is similar to the MBA and predicts similar numbers across the board. You can see existing housing starts, new home sales, home starts, single and multifamily numbers should all be similar to what we experienced in 2017, 2018, and 2019. By the way, all these charts will be available below, so you too can nerd out with all of your teams. But back to the charts and the good news. NAR believes that these numbers will even increase next year across the board, with increases in all categories. NAR and MBA even agree that rates should stay low next year, NAR predicting 3.6%, MBA predicting 3.9%. So what gives, Ryan? What's up with the bold prediction? Rates are supposed to stay low and housing will continue to plug away. Well, let me explain that before you get too mad. Lenders, I'll speak to you first. As I said earlier, we all received a $254 billion gift this year. That surprise production gift will not be there next year. Early forecasts show a reduction in overall volume to the tune of $200 billion. So the overall pie shrinks. There's more to unpack here, but I'll do that when I have more time. Again, come see us in November. Realtors, I need to wrap up the show, but my bold prediction goes for you guys as well. Yes, the numbers look good for you. Your pie isn't shrinking because your volume is shrinking like loan officers. Your pie is shrinking because you have so many new competitors. Business will be there for the taking in 2020, but you will certainly have to fight for it. And that honestly goes for everyone listening. It's not doom and gloom. It's just facts in an ever-changing, super competitive industry. What's important is how we prepare for this now. That's the takeaway today. Sure, all these numbers we shared are interesting and should be discussed with your teams, but the real meaningful conversation, if you're picking up what I'm laying down, is how are we going to pivot in 2020 to ensure our success as loan officers, realtors, and as companies? What tweaks and changes do we need to make now in 2019 so we are ready when 2020 comes? This is a discussion that should start now and continue for the rest of the year. The smart ones will make the necessary changes. The folks that concern me are the ones burying their head in the sand saying business as usual. Guys, I promise you, it is not business as usual. 2020 is almost here and it does not resemble yesteryear. And as I tell my son with everything in life and all the challenges he faces on a daily basis, figure it out. Figure it out. It can be done. See you guys next week.